Welcome back. I am Pratap here, and in this video let us generate stocks near demand and supply zones for daily time frame and a 75 minutes time frame for the date 28th February 2024. And also I will show you the analysis on the live charts in this video. It is a special video. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. And you can visit our YouTube channel. There you can find the playlist supply demand zone price action course. And here all the training lessons are available. I'm also providing the link to this playlist in this YouTube video description. Click the link, you will get into this page and then scroll down to the bottom of this page. And here, starting from lesson 1.1, all the training lessons are available in an order. Please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. Please join in the Telegram channel. It will be useful to you. Each time when we release a new video, we will provide an update in our Telegram channel. Now let us analyze high liquidity zones that we are generating for yesterday's daily time frame and 75 minutes time frame. First we will generate the reports. For daily time frame, let us find the stocks near daily demand zone. So this is the list. We got a big list yesterday. Total 19 stocks are filtered. So let us identify high liquidity daily demand zones. And also I will show you how I will analyze the charts. Because currently now the market is going on. We are in the live market. So while drawing the zones, let us identify what is the performance of our zones in today's market. And another important point is fine tuning the zones, how exactly I am doing, also will be helpful to you. Let us check the high liquidity demand zones. This is a high liquidity demand zone, but it is Nifty 50. It is an indices. Indices I am not analyzing on the charts. The reason is F&O we cannot trade in Nifty indices. Cash trade you can do, but by using the concept ETF, exchange traded funds. Any other high liquidity demand zones? Yes, we have a high liquidity demand zone, that is Bajaj Finance, and it is a fresh zone. The advantage of high liquidity zone is we don't bother about the trend, we don't bother about the price direction, we don't bother about the odd enhancer score, or even we don't bother about the location. We just draw the zone. Only technique we follow is fine tuning the zone as per the zone confluence that you land in lesson 16.1 and lesson 16.2. How to fine tune the zone I clearly explained to you in that lesson 16. In lesson 16.2 practical session, I have explained on the live charts. And all these days for the last 4 months, 5 months, we are fine tuning the zones, high liquidity zones as per the technique zone confluence. So Bajaj Finance, okay, how I am going to draw in TradingView. This is another technique you should remember. Every time what I do when I look into the high liquidity zone, I look into the leg-in candle. See the column leg-in? So in Bajaj Finance, what is the leg-in? The leg-in is 4th May 2023. After that we have one base candle. So then I go to the chart. I open Bajaj Finance in daily time frame because this is a daily time frame. So the time frame is daily. So when is the leg-in? 4th May 2023. See here, this is 4th May. We have one base candle and we have a rally candle. See here, 4th May 2023. This is the leg-in. After that, one base candle. Whatever the base candles, those base candles I will draw a zone. Then I am changing the color to daily demand zone. But here I will change it to even more light color. Weekly demand zone color I am giving. Okay, rally-based rally is a daily demand zone. This is a fresh zone. See, prices haven't entered into this zone so far. It is a fresh zone. Even today also we did not get entry in this zone. But anyway, here how I fine tune. So from daily, I will go to 75 minutes time frame. In the 75 minutes time frame, is there any 75 minute zone? We have a rally, 1, 2, 3, 4 base candles. Actually, this is a medium size leg candle. Medium size leg candle can be considered as a base candle if it is a part of the base candles. See, we have already base candles are there. Because base candles are there, before the leg out, this also will be considered as base candle part of this, even though this is medium size. Generally, we do this. But lower time frame, if really the structure is not good, next lower time frame, below these time frames, we will find. Okay, this is the 75 minutes demand zone. So we have daily, inside daily, we have 75 minutes demand zone. Okay, inside 75 minutes demand zone, what we have to do? We have to fine tune to 15 minutes demand zone. This is 75 minutes. Now I am changing the time frame to 15 minutes. In this 15 minutes, let us fine tune. Look into the structure. We have a base candle 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. See, so many base candles. When these many base candles are there, what will happen to the zone? The zone will be violated. I'm not even looking into 5 minutes. I will look into 5 minutes if there are if there is any price action near to this zone earlier, and if from there if there is a strong rejection, maybe I can look for aggressive trade and then I will go to 5 minutes zone by bypassing the 15 minute zone. But anyway, we didn't have any price action close here, very close to this zone. So that's why I am believing this zone will be violated easily. We can't plan a trade in this zone. So when I know I'm very sure the zone will be violated, I don't bother about even drawing a zone here and further fine tuning. We have drawn up to 75 minutes. 15 minutes and 5 minutes I am not drawing. It is indicating that this zone will be violated. But I will keep them in the watch list. I will observe. Because we have to see how exactly these zones will be violated. So I am adding this stock. Even though this stock won't be used for our trading purpose. We don't trade Bajaj Finance in this zone. So sometimes these zones will work. There could be other reasons. Maybe institutions may create a new zone inside and push the prices up. That could be the reason why it is working. Maybe sometimes there could be a lower time frames, like 1 minute, some order flow will be there. Maybe that order flow might give you a trade, but they may not work every time. They may not work. Sometimes they may work. Those small order flows, there could be small order flows. Maybe that time supply could be very weak. That could be the reason why the small order flow is pushing the prices up. That is also possible. But we can't take a bet on all these options. We should have a proper structure, price structure, and proper rules already we framed for high liquidity zones. All should satisfy. Sometimes you can go for aggressive trades. Even 1 minute also you can go for aggressive trade. If there are strong price action close, you can plan, nothing wrong. You can bypass 5 minute zone, you can bypass 15 minute zone, or even you can directly go to 1 minute and you can take trade if there is a very strong price action close. Otherwise, 1 minute zones will easily be violated. There could be a strong price action close. Maybe if there are rejections near to the zone, and then market gave a very good move from there. Maybe that way you can assume there in that area maybe there is a strong order flow. That way you can give priority to that 1 minute zone or even 5 minute zone, even though you bypassed a 15 minute zone. But anyway, Bajaj Finance, we are assuming this zone will be violated. And the next stock, high liquidity zone. Next one is India Mart. This is also a high liquidity zone, a fresh zone, and created recently 1/2/2024. So let us draw this zone. How do I draw the zone? I will look into in our report, I will look into the leg-in candle. After leg-in, how many base candles are there? We have 3 base candles after 22nd February. So let me go to daily time frame. India Mart. So 22nd February. Is it 22nd February? Yes. Something wrong. Sorry, I'm looking into a wrong stock. Indus Bank supply zone I'm looking. I'm very sorry. So India Mart near supply zone, it is 1st February 2024. 1st February 2024, again this is also having 3 base candles. 1st February. Yeah, this is the 1st February. We have a rally, base and rally candle. This is a ERC candle. First February, 3 base candles we have. Sorry. 3 base candles. 1st February, rally, 3 base candles. Actually, why we are considering this is part of the base is, there is a reason actually. If you manually, if I do, I will consider this as a ERC candle. But software, you know what it is doing? This is comparing with all the earlier candles. See, all these are all big candles. Compared to these big candles, this will consider this as a medium size candle. Because, and these consider as a small candles, tiny candles, according to the software point of view. But as a human, what we do? Okay, this is a big candle, so this is a leg-in, base, rally. That way we draw. But computer is considering the algorithm. It not only just compares this candle alone, the candles comparing with all the previous candles. See how large these candles are. Compared to all these large candles, this is a medium sized candle. Actually, this is the perfect way of drawing the candles. But comparing all these one by one candle, big candles, manually, it is not practical for the human. That is the reason why within our limits, okay, whatever is the best, that is what we do. Okay, because computer is considered, we have to respect the algorithm because it is more accurate algorithm compared to the human way of doing the analysis. I'm not saying human way of doing is not right. This is also right. Rally base rally you can draw, nothing wrong. Rally base rally. But might be less accurate compared to the computer. That point you have to understand. So we have a rally, 3 base candles and rally. So this is a daily zone. Inside this daily, you need to identify a 75 minutes zone. So I'm going to the 75 minutes time frame. In the 75 minutes time frame, here you have rally, 3 base candles and again a rally. This is 75 minutes zone, 75 minutes demand zone. Inside this 75 minutes, you should identify a 15-minute zone. So let us go to 15 minutes time frame. And look into the structure. You have a base candle 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. when such kind of base candles are there, what will happen to the zone? The zone will be easily violated. Even look into the 5 minutes. The 5-minute structure is also not good. Look into all these candles, base candles, small candles. So that means 5 minutes, 15 minutes, the zone structure is not at all good. But if you notice, today already prices entered into this zone here. See here. And there is a big push given from here. I told you, rarely such kind of things you can see. The reasons could be institutions might have created a new zone. But is institutions created any new zone? Not inside this area. Outside we have a rally candle, base candles, rally they created. But why this big push from the zone, which is not good? Which is not good. Maybe there could be some 1 minute zone might be there. Okay, 1 minute zone also easily violate. Why it didn't violate it? Maybe there could be a strong price action close. If you go to 1 minute, you will get clarity. I think it is recent data, 1 minute data might be there, yes. Look into this 1 minute data. What is it you are seeing in the 1 minute? We have a leg-in candle, we have a tiny base candle, and we have a rally candle. This is a small candle considering as a base. This is a 1 minute demand zone. We bypassed 15 minutes, we bypassed 5 minutes, and directly we went to 1 minute to find the reason why it is working. Actually, when you do analysis before the trade happens, you will get some clarity. Generally what we do, we are ignoring at 5 minutes level or 15 minutes level, not getting into 1 minute level. But if you are a highly experienced person, even you will trade at 1 minute level. Because most of you people are currently at learning stage or maybe having less experience. Maybe maximum you might be having up to 5 years or 6 years in supply demand zone price action. If you have some 8 years, 9 years in supply demand zone price action, probably you might have been an expert, and even 1 minutes also you will be trading at 1 minute level. At the time, probably every stock you will be looking into 1 minute level, what's really happening to find the price actions. But early stage, looking into 1 minute level and understanding all these scenarios are not easy for you. That's why limit to 5 minutes level. But why I am showing you, sometimes why 1 minute also works very well. If these 1 minutes are inside the daily high liquidity zone, even by bypassing 15 minutes and 5 minutes, still you can take a trade if there are strong price action close. See, we have a rally, base rally, and see prices are coming towards this zone, but the order flow in this area just before the zone, probably within 1 minute area also there is strong order flow. Apart from the zone, before also there is a strong order flow. That means institutions have started their order flow from this area, from where these prices are moving from this area. It started, probably it will be going until the distal line of this 1 minute zone. It didn't let the prices go down. That means from here to here, there is a strong order flow. See the move after that. Not only that, even the move also you need to look into that. See, the move went very high after that. It went very high. And now only they are returning from here. Till that point, it didn't let the prices to get into this area. So let's go to 5 minutes to see this entire move here. See, started from here. This is a 1 minute area. I'm showing you in 5 minutes a chart. Here prices started. This is 5 minutes area. For us, all these are all what to say, leg candles. This is a leg candle, rally candle. This is another leg candle. This is another leg candle. We have large range is there. Because of these ranges, we consider all these are all ERC candles. But institutions kept their real order flow at 1 minute, and also they gave a price action clue also for us. Just before their prices came, and then before the zone, they started moving up. Somewhere up to the here, prices came and then started moving. All this indicates this is a strong area, 1 minute area. And today what happened? Prices entered up to this 1 minute area. See here. Prices entered up to this. Give an entry today. And then see the push from here. And what is the target? Generally in high liquidity zones, 15 minutes. See here we have a ERC candle, leg candle, 2 base candles, and a drop candle. So let us draw a zone, supply zone, which is going to be our target. So those who traded at 1 minute level, this is the 1 minute aggressive trade. But remember, 1 minute aggressive trades are a very high risky aggressive trade. They are very high risky trades. They won't work every time just like what you have seen today. But sometimes they work like this. Once this 1 minute zone is violated, then this entire zone will be violated easily because the price structure is not good. This is the one area institutions secretly kept this 1 minute, and they have added a price action clue, and based on this price action clue, if you would have taken a trade, this could have been your profit. How much profit you would have been got? Let us analyze. Why not? Why can't we do this? This is the close of this candle. $2642.50 minus what is the entry? Entry is at this 1 minute level. So what is the value? 2613.30. 2613.30. Sorry. 2613.30. So it has given 29.2 rupees profit. So this is India Mart, right? Let us go to this margin calculator, 0 thus. India Mart. Lot size is 300 and margin cost is 1,66,561. So 29.2 into 300. So you would have got 8,760 rupees profit. ₹8,760 profit. And what could be the ROI? Into 100 divided by the cost of one future slot, 1,66,561. This is a rough value. You would have got 5.25. That means 5.3% profit you would have got. Rounded value. 5.3% ROI you would have got. So could have been excellent trade. But if you want to take such kind of trades, you should be a highly experienced person. Because mostly we are limiting to 5 minutes level. But to check the performance of our high liquidity zones, how they are working, this is just an example. Definitely this is not a trade for us. There is no doubt in that. Why there is a big move? Based on that we analyzed, we back tested, and finally we found the reason. Because if you are a beginner or your experience is less experience, that means within 3 to 5 years of supply demand zone experience you are having. I consider that as an average experience or less experience. But when you are having such kind of knowledge, you have to learn things, what is really happening at 1 minute level also. If you would have looked into the 1 minute, then only you know there is a price action clue. What is a price action clue? A rejection near the zone and a big move from there in the market. That means some strong order flow is there. See, always I talk about this point. Strong order flow. Always we should look for strong order flow area. The strong order flow area, always you identify with the help of the price action clues like rejections and a big move from there in the market. Those areas, your profitable areas, those areas, if you properly plan your trade, you get a good profit like this. But everything we are looking inside the high liquidity area. We are not, don't go for such kind of trades outside the high liquidity area. Inside the high liquidity area only you have to plan the trades. Outside the high liquidity area, it is quite dangerous. What institutions will do once they break, maybe we don't know, maybe one more time it will reach, again it may give a test, or this time the zone will be violated because it already went more deep. Probably institutions may violate this, and this entire 75-minute zone will easily be violated. If institutions don't want to violate this 75 minutes area, what they do? Again they create a fresh 15-minute zone here, below somewhere here, and again they push the prices up. That possibility is also there. If that happens, next retracement we will get a trading opportunity. So this is about India Mart. Let me add to our watch list. See, currently now market is on live. In the live market, we are like analyzing our charts now. I remember someone asked me analysis on the live chart. Generally, live market, I don't get the time to analyze because I was not in the trade today. Yesterday, I am not available due to some family function in my within the close circle. And today I came very late. The moment I came, I already recorded our yesterday's high liquidity zone analysis. I decided not to trade today, and now at least I am spending my time that is helpful to you, because someone asked already, do this zone analysis during live market. At least this will be a learning for you in future. Somebody is having this requirement, they can refer this video. Okay, this is India Mart. What is the next high liquidity zone? We can't take, this is pierced, IndusInd Bank is pierced. Pierced zones we don't trade. Any other high liquidity zones? Yes, we have another Page Industries is a high liquidity zone. It is a fresh zone. When it is created, 5, 10, 20, 21. We have a problem here. What is the problem? 5, 10, 20, 21 means we get in TradingView, we get data up to 15 minutes. 5 minutes data is not available. 5 minutes data is available only for last 1 year in TradingView. We can't fine tune. But see, let us check how the structure is in the 15 minutes in this stock. Because if the 15 minutes candle is only one candle, let us assume, mostly that supports even 5 minutes. Worst case, 5 minutes candles you will get, but need not be. Sometimes you may get some candles from leg candles also, leg out candles also, you will get some base candles. That way count may cross 6 candles sometimes. But mostly we give, if it is one candle, we give some kind of priority. If data is not there, if the structure of the zone is good in remaining all the time frames. We'll see. Page Industries, 1510, 1510, 2021, one candle. So opening in daily time frame. First, let me add this to daily HLQ zone. Sometimes I may forget to add into the watch list. Okay, this is a daily zone. 1510. Is it 1510 or 510? Sorry, 510. It is not 1510. Sorry for my mistake. It is 510 2021 one base candle. So this is a legging, this is the base, and this is the rally, a perfect zone identified by our software. So this is a daily demand zone. This is a daily demand zone, rally, base, rally. Maybe the zone could be strong. Before that there were rejections here, but okay, some distance is there. Still it is a good price action flow in this area, some order flow is there. Yeah, this is very clear. See here how strong order flow in this entire area. This is the first time. Second time went a little deep. And third time it went very close to the zone. That means this is a very good zone. Probably the trading, we may get a very good trading opportunity in this zone, but unfortunately 5 minutes data is not available. So first let us, at least we will fine tune up to 15 minutes zone. So what I am doing, let me find a zone here. Here we have 75 minutes rally, base rally is there. This is the only valid zone. Rally, base, rally. Let us draw this zone, but it went a little outside. The reason is it is a zone confluence we can consider. But we give highest priority once prices are entering into this distal line of, proximal line of this daily zone. Maybe sometimes we may find a zone at this proximal line. That means at this zone high of daily zone high, maybe in 15 minutes or 5 minutes. Anyway, 5 minutes data is not there with us. So we have a rally base rally. This is a 75 minute zone. Let me change the color. Because daily zone I am giving weekly color, and 75 minute zone I am giving daily color. The reason is up to 15 minutes, 5 minutes we can get the colors, different colors. Because generally I use 5 minutes and 15 minutes same color. If I draw same color for 5 minutes and 15 minutes, sometimes it's a big confusion. That's why daily I am giving weekly color, weekly I am giving, and 75 minutes I am giving daily color. 15 minutes I am giving 75 minutes color, and 5 minutes gets its own color. Okay, we have a daily zone, you're having confluence with 75 minute zone. So for 75 minutes, you should identify a 15 minutes zone. So let me go to the 15 minutes time frame. So we have to go back so much. Lot of data is there. Yeah, here we have 15 minutes inside 75 minutes. When we draw, we have a rally, base rally, but the problem is everything went outside the zone. Generally, we don't prefer trading outside the zone. At least zone confluence should be there. It should be. I mean, with comparing with daily, I'm telling. Comparing with daily. At least some part, while taking the trade, some part should be inside the daily. But this is completely going outside the daily. Our high liquidity is daily. But if you look into this, the real order flow is here. Where is the real order flow? Rally, base, rally, candle. This you can consider. Don't compare with this is a big candle. Maybe it might be looking like medium size candle or little bigger than medium size, or maybe medium size. Okay, we can nothing wrong in taking this as a trade because order flow is starting from here. Or you can also consider This is a base candle. Maybe you can, sometimes you compromise and we draw. This is a leg candle. This is a leg candle. These two are base candles. So type 2 proximal we can draw like this. Or if you want to consider this as a ERC candle, maybe the length is a little, length means range. The range is a little bigger. See, compare these two candles. This candle's range is bigger than this medium size, or maybe if you want to consider. So anyway, you can draw a zone like this. But instead what I prefer is drawing a zone like this. If you ask me, I draw a zone like this because I am convinced with this candle to consider this as a leg out. Already it picked up the orders from this zone. This is one possible, or you can limit like this also. You can limit yourself to this one. See, either way you can draw. Either you can draw like this, because it already picked up the orders from this zone. That is the reason why. Or you can draw like this also. Maybe if you are not convinced this is a leg candle, then you can draw like this also. This is definitely a leg candle, no doubt. These two base candles, and then you have a rally candle. That is also you can draw. But I prefer either this one. If not, I will prefer like this. In this way you can plan the trade. But 5 minutes, so what is the structure of the 5 minutes? We don't know. We don't have clarity how exactly it is. Is it a good structure? See, definitely this is a fine-tuned area. See, we have a daily zone. Inside we have a 75-minute zone. Within the 75 minutes, we got a 5-minute zone. 15-minute zone, not 5 minutes, 15-minute zone. This 15-minute zone exactly fit inside the daily zone. But somewhere here order flow is there is no doubt in that. Because that's why there is a push, your leg out candle. Somewhere here order flow. But how to find the real order flow? Unless you don't have the 5 minutes data. That is a big question. So generally what we do, we compromise and we take a risk and we but 15 minutes risk is also quite high. But how do you plan your trade? This is a question mark. But if you look into this, today's data, see already prices entered into this zone. They entered into this zone. Twice they entered into the zone. This is the first time, this is the second time. So what is your target? This is going to be your target. Drop, base, drop. Today morning 9:15 minutes candle prices entered. Again another entry it has given, second choice it has given at 10 o'clock 45. It reached the target. Drop, base, drop. So then if that is the case, okay, if you have taken a trade but the risk is very high, 5 minutes you can't minimize the risk. So your risk plays the major role here, but it is a successful trade. But only choice we have to confirmation whether there is a valid 5-minute zone or not. In NeoStock, we have a special feature called supply demand zone chain. Because last Sunday we analyzed Nifty 50 by using supply demand zone chain. After that I generated report for Nifty, Bank Nifty also, but I told you to analyze on your own. But I gave you the report. So with that help, we can identify whether there is any 5 minutes valid demand zone available in this area. So let's take the help of our NeoStock In NeoStock, we have a top-down analysis report. Here we can find, let me add this stock code, page industries, and which time frame we need to look for? 5 minutes time frame. Let me generate SDZ chain for 5 minutes, page industries. So this is the complete thing we got. And a NeoStock database is having 15 minutes and 5 minutes data for the last 4 years. From 2020, somewhere in October, I think onwards we have the data. The first zone is in 11 to 11. That means from November onwards, around November, October, November onwards, we have the data from the year 2020. But this zone is 2021. So let's check whether there is any zone available where within this area 34065 is the high of this zone, 15-minute zone, 3472. Do we have any 5-minute zone? So let us look into the zone high. What is the value? Sorry, I forgot immediately. Around 3465. So we need to check in this column, zone high, 3400. But here we have 3300. We have a high liquidity zone. This is a high liquidity zone, but low priority high liquidity zone. But this is already pierced, so we can't plan on this. This is 2300, but we are looking for a tough day today. This value is 3400, not 3300. I think something wrong is I'm doing. 3400, but I am looking at 2300. I have to look for 3000. 3400. I'm sorry. I'm looking at 2000 value instead of 3000. So 3400 value. We have 3453 to 3384. And this is a low priority high liquidity zone, but it is a fresh zone. See here. So 34053. Let me draw a line at this. Horizontal line at this. I'm copying this value. What I'm doing, I go to the chart. Horizontal line I'm drawing here somewhere. Wherever you draw, just double click, copy the value here. 3453.55. Click OK, automatically the line will be adjusted. See, the line is adjusted. This is the entry. And what is our stop loss? That is a zone low. This is type 1 entry. First I will show you with the type 1 entry till the digital line. After that, to minimize the risk, we will look for type 2. Zone high and a zone low is our stop loss. And this is a valid zone. How many base candles it is? This zone is having 2 base candles. Perfect zone. 33824.89, that means 90 paisa. Let me draw another horizontal line. Anywhere you click, actually it should go below, right? So just want to show you. Once you type the value here, 33.90, 3382.4.90. Click OK. See, the zone is adjusted. Almost same as your 5 minutes, 15 minutes zone. Your 5-minute zone and 15-minute zone are almost same. But this is a type 1 entry of 5-minute zone. But the 15 minutes zone we have drawn is a type 2 of a 15-minute zone we have drawn. Still, if you feel the risk is high, what you can do? Take type 2 entry. Already in the report I gave you, even type 2 also, proximal 2. See here, Prevo X2, proximal 2, 85. I'm copying this value. What I'm doing? The first blue color line, I double click that, copy the value here, 85. 34019.85. Now see, the line will be further reduced. See, the risk is reduced. So that means this is your entry and this is your stop loss. In between you can draw a 5-minute zone. How you can draw? Go to the 15 minutes time frame. This is anyway 15 minutes time frame. Go to this area. So between these lines, you draw the zone. Place your mouse here exactly on this blue color line and drag up to, maybe draw it from this. Okay, that's it. Now the zone is drawn and give demand zone color. See here, this is your 5-minute zone. Now you can delete these blue color lines, what you have drawn for reference. That means you have drawn a 5-minute zone based on our data available in our software. This is the only one advantage we are having with this software is we can identify zones. That means you got an entry, excellent entry today, and also reached the target, 15 minutes target. You got an entry and then reached the target. Let us calculate how much profit we would have got. This is a perfect zone. The only thing is the data is missing in TradingView. That became a disadvantage for you. That is the only one disadvantage we have. Otherwise, we would have missed a very good trade today because of the TradingView's disadvantage. TradingView is not providing data more than last 1 year. But we solved that problem with the help of our NeoStock's high liquidity zone. But unfortunately, you don't have access to that at this point of time. That is the only disadvantage you have. So we got a chain here. As per supply demand zone chain, we drawn this 5-minute zone and then reached the target. Let us calculate the profit, how much we would have got. The close of this candle is our target. What is the close of this candle? 34,549. 34,549. Yes. And what is our entry? The entry of this zone, at this zone, approximately the entry is 34,021 or 23 rupees, let us say. 34,023. Or maybe 34,025. Let me say rough value 34,025. So we got 524 rupees profit for each stock for Page Industry. But what is the lot size? So 15 is the lot, and cost of the lot is 1,36,257 approximately. So 524 into 15, you got 7,860 rupees profit. Page Industries. Let me note down also, because parallelly, so that to save my time also, while because we need to upload this data to Excel sheet. So 7,860 is the profit. And what is the ROI? Into 100 divided by 1,36,257. This is approximate value. A little higher or little low will be there, approximately okay. We got a rough value. We got 5.768, that means 5.8%, the round value. We got 5.8% ROI we got. So excellent trade. Today we got 2 successful trades. But the problem is, yesterday I did not available. I couldn't generate. You missed some of these trades. But maybe, I'm sure, definitely you would not have taken these 2 trades. The reason is, first one is a 1 minute high liquidity zone. 1 minute high liquidity, sorry, it's not 1 minute high liquidity, it is a 1 minute aggressive trade. 1 minute aggressive trade, I don't think you will be able to trade. You will be able to find, first of all. Because that level of exposure we are yet to build. And second one, Page Industry would have been a good trade for you, but unfortunately, TradingView's disadvantage, not providing the data for more than 1 year, is a disadvantage. That way you miss this trade. Are those people who have compromised it to 15 minutes and took the trade, probably they would have got this profit, 7,860 rupees profit. Maybe a little less you would have got, because we fine tuned to 5 minutes type 2 entry. You would have taken a 15 minutes type 2. Maybe a little early you would have taken the entry. If you look into the chart, maybe somewhere here you would have taken the entry. That way you would have got another 25, 35, 45. Another 30 rupees less profit you would have taken. But that enabled 2 trading opportunities. If you missed at this candle, 9:15 candle, at least you would have got another trading opportunity at 15 minutes entry level at 10 o'clock 45 minutes candle. After the 10 o'clock 15 minutes candle, it reached the target. So those people who have taken at 15 minutes candle at 10 o'clock 45, you would have finished your trade at 45 minutes time frame. If this data is available to you yesterday, but unfortunately, I was not available yesterday, couldn't give you this report on time. Okay, now let us look into the next high liquidity zone. Apart from this Page Industry, anything else available? Yes, we have REC Limited is also there. It is a high liquidity zone, but it is already tested 4 times, price rejections. Any fresh 5-minute zones we need to identify. When this zone is created, 2712, 2023, 2 base candles are there. The leg-in is on 2712. That is the one you have to remember. Let me keep my phone in silent mode. Otherwise, somebody is calling, you will get the ringtone. Okay, I'm sorry. Okay, 2712, 2023, REC Limited. Let me open in the chart. Let me delete this. Okay. 2712, 2 base candles. Let me remove the wall drawings. So we are at 15 minutes. We have to go to daily time frame. In daily time frame, 2712. Where is it? So this is the one. We have a drop, two base candles, and a rally. So this is a daily demand zone. See, already see how many times it is tested here. This is a perfect high liquidity zone, this is daily zone. And now inside we need to identify a fresh 75 minute zones. Sorry, not fresh. 5 minutes we have to look for fresh 75. 75 minutes should be a valid 75, not pierced. That is what I am trying to say. If you draw a zone, it is not pierced, right? Yes. The real order flow is in this area. This is a 125 minutes zone. So here we have a rally, base, rally. Leg in, base, leg out. See here we have a first test. This is the first test. This is the second test. This is the third test. According to the software, it is tested 4 times. Yeah, this is the 4th test because we are not looking into 75, we are looking into daily. See, already daily proximal line, that is high of the zone, already tested. This is the 4th test, but not into the 75 minutes. So that's why daily is showing 4 times it is tested. And inside this 75 minutes, what we should do? We should identify a 15-minute zone. So let us check whether there is any 15-minute zone inside this. Yes, we have a drop candle, we have 2 base candles and a rally candle. That means you can draw a 15-minute zone like this. This is a 15 minutes demand zone. So inside daily we have 75 minutes. Inside 75 we have 15 minutes. Rally, and after that prices came and tested once, second time 15 minutes, third time 15 minutes. That means again another, first time, second time, third time, this is the third time. All these are all high liquidity zones. That means inside daily there is a 75 minutes high liquidity zone. Inside 75 minutes there is a daily high liquidity, there is a 15 minutes high liquidity zone. Now inside 15 we should look for a 5 minutes. Let us look for 5 minutes zone. See here, we have a drop, 2 base candles and a rally candle, and then moving up, a good rally. This is the real order flow, started from here. A drop candle, 2 base candles, a rally candle. So the 5 minutes, this is the first time orders are picked up from this 5 minute zone. Second time the prices didn't come up to the 5 minutes. Probably institutions might have added a new areas here. Third time again they came very close to this. That means the new order flows institutions what added did not allow prices to reach here. This is again fourth time. This is the first time. This is the second time. This is the third. Sorry, here is the first. This is the second. This is the third. This is the fourth. Fourth also just holded before this. It's not letting the prices to come up to 5 minutes area. So what you can do, you can plan a trade. How you can plan? If 15 minutes is within your risk, plan your trade at 15 minutes entry instead of 5 minutes. Because see how many times 5 minutes entry is missed earlier. They are not letting the prices to get into, up to the 5 minutes area. Take a trade at 15 minutes itself. If the risk is within the limit. If the risk is not within your limit, there is no other choice. You have to wait until prices comes to 5 minutes area. But here one point you have to understand, the 5 minutes we already fine-tuned to type 2 entry. Type 1 would have given more order flows. Probably with type 1 entry, maybe the real order flow might be there. But anyway, 15 minutes, did I draw wick to wick or did I draw? Yeah, 15 minutes I have drawn wick to wick. Drop 2 base candles, wick to wick I have drawn, rally. If you want to reduce, just take type 2 entry at 5 minutes, like this. If your risk is minimized, you can plan your trade at 5 minutes area, 15 minutes area. But anyway, structure is excellent. Excellent structure is there, price structures. But many times prices are not allowed to reach up to 15 minutes, 5 minutes zone. But anyway, prices did not come today. If you look into this price, the recent data, so we didn't get an entry. But this is an excellent stock according to our high liquidity zones. Perfect. Why I am saying perfect? We have a daily zone. Inside daily, we have 75. That is also high liquidity. Inside 75, we have 15 minutes. That is also high liquidity. And moreover, each time, see the rejections from the zone. Each entry, see the rejection. First time, second time, third time, fourth time also, prices did not come up to 15 minutes. Only daily itself the rejection. That means institutions keep on, keep on, they are adding the orders into this area. They keep on adding new orders in this area. That is the reason why such a strong order flow is there in this area. So it's a good stock. So let me add to our watch list. This is how I do every day. What I do, first I will publish the report to you. I will post on our Telegram channel after publishing in the YouTube. And then one by one stock I will take from this list. This is the way I go to the TradingView, and whatever the login date is there, from there I will draw the zone. Then whatever the software has suggested, that exactly that zone I will draw. Then 75 minutes onwards, I will draw. I will not depend on the software. So I will fine tune as per my experience and skills. Only the daily zones, the coordinates I take exactly what this has provided. Coordinates means your leg in, base candles and leg out. Same thing you will be having in the YouTube, the same reports. The only difference between you and me is I am directly taking the data from my software report, and you will be taking the software reports from YouTube. That is the only difference. Because I am taking software, I only have the advantage of copy paste the names. But you are referring in the YouTube, you just need to type the names in the search box. See here what I am doing. This is REC Limited. I will click, I will copy the name. And then I will go to this zone and I will paste. That is the only additional advantage I have. And what you will be doing here, REC Ltd, you will be typing. Because you are seeing the name. It is the exact replica. YouTube video, through YouTube video you are getting the report is not a disadvantage for you. It is the exact replica for you. The Only thing is the other facilities I am having access, you won't be having access in the software. But why you need, when I am publishing the most powerful report in the YouTube, why you need the other? Mostly you don't require to get into those other reports. Not really required. It's unnecessarily increasing the cost. That is, in case if I provide access to the software, as I explained in our first question and answer session. I am not hiding the most powerful concept. I am publishing the reports of the most powerful concept to you every day. It is up to you how you are using them and getting the money. Okay, anyway, REC Limited is the next one we have analyzed, and any more? Yeah, one more is there, but this is Piast. Okay, fine. This is about demand zones. Out of these two demand zones, we got the trades today. That means software provided the opportunity. Whether you take the trade or not, that is a different story. Software provided the opportunities. If you miss that opportunity, that is a different story. But according to the software, it did its job by providing opportunities into trades. And now this is from daily demand zones. Now we have daily supply zones are there, 75 minutes demand supply zones are there. So now let me go back, go to the daily time frame. I am generating the stocks near daily supply zone. Only 4 stocks are filtered. Any high liquidity supply zones from this list? No. All the supply zones are normal supply zones. We don't plan any high liquidity trades from this report. Now let's go back, changing the time frame to 75 minutes. So entry time frame is 75 minutes. Let us find the stocks near 75 minutes demand zone. Now 11 stocks are filtered, 11 demand zones, 75 minutes demand zones. Now what is our goal? To find high liquidity zones from this list. Okay, Nifty Bank Nifty, we have a high liquidity zone. Already one rejection was there earlier. Let us analyze Bank Nifty. Why not? Because Nifty and Bank Nifty, any opportunities we should not miss. Because many people will trade from this. So when is the zone? 14th February, 11:45. 14th February, 11:45. And one base candle. Let me delete earlier analysis. So we have to go to 75 minutes. I think I made a mistake earlier when I deleted. Is it right or wrong? This is the one. This is 14th February. This is the old one. So let me delete. February. This is the one. 14th February, 11:45. We have a base candle and we have a rally candle, and there was a rejection from this candle. That's why it's shown in the rejection. How strong? That means this zone is doing very good. Strong zone. This is a 75-minute zone. This is a 75-minute zone. 14th February, 11:45. We have a base candle check once again. 14th February, 11:45 candle, one base candle. So what is it? This is what software has given. What is that you have to do? Fine tune the zone. Go to the 15 minutes time frame inside the 75. Here we have identified two zones. This is the first one, drop, 2 base candles rally, and this is another one, drop, base candle and a rally. I am drawing type 2 level. This is a 15 minutes demand zone. This is another 15 minutes demand zone. So we have two 15 minutes demand zone. And we need to find fresh zones inside this. So for that, go to 5 minutes time frame. Let us fine tune. So this is the first one. We have a drop, base, drop. This is a demand zone. And already it is tested once and gave an entry. But again, drop, 2 base candles and a rally. This is created. You have one more zone. So here also you can plan a trade again. The one below is tested, but this is a fresh zone. Drop, 2 base candles and a rally. And what about this one? We have a rally, drop, base, rally, and then prices came down. This is a leg in. You have a base, rally. This is the way you can plan a trade. Type 2 entry. This zone confluence, 5 minutes and 15 minutes. Inside 75 minutes. See here, prices came. We got an entry today. Exactly in the 5 minutes. Let me delete the 15 minutes, you will get clarity. See, this is the fine-tuned area inside 15. 15 I just deleted so that there is no overlap with the colors and creating disturbance. See here, perfect entry. At 10 o'clock, 10 minutes candle, we got Bank Nifty trade. And what is the target? 15 minutes target. Where is the 15-minute zone? Here is the 15-minute zone. Just now it reached the target, it seems. We've been recording for the last 1 hour. Just now it reached the target. At 10 o'clock, 15 minutes. See, if I would not have recorded this video today, I might be trading, probably identified this trade. It would have been a successful trade for me. Because I decided not to trade and give importance to you people. So that I can show you this live. Because I started my recording from somewhere at around 10 o'clock or 9:45 or 10 o'clock. The previous video. And then continuation, this video I am recording. See, Bank Nifty. See, the day I missed yesterday, how many opportunities, not only me, you people also missed. Previously also once it happened, I remember. Previously also once I was not available. The next day we got some 3 or 4 successful trades we got. It's our bad luck. The day I'm missing, the day we are getting more trades, more successful trades. How much profit we would have got in Bank Nifty today? Let us calculate. This is what we all missed. I'm feeling very sorry. Otherwise, you guys would have got a very good profits. Oh my God. Okay. The open of this candle is the entry, target. 46,206.45. 46,206.45. Let me check again. 46,255. Oh, sorry. This is the open. 46,206. Yeah, 46,206.45. This is our target minus what is the entry? Entry is here approximately. Or let me go to 5 minutes and find that exact value. Let us do exact calculation because this is the perfect trade. Because earlier one is, they are also good trades, but I am not saying perfect because one is having dependency on 1 minute aggressive, mostly that is beyond our experience level. And the second one is a perfect trade on daily demand zone, that is page industry. But unfortunately, your data is missing in TradingView because we have a feature called supply demand zone chain identified. If the data TradingView would have provided the data, that would have been a perfect trade, page industry. Because you have the disadvantage, I'm not calling that as a perfect trade for you, for your point of view. But this is a perfect trade. You have the data with you. So the close of this candle is the entry. The close is 45,707.85. 45,707.85. Let me verify once again. The close of this candle is our entry. 45,707.85. Yes, perfect. Now let us check the value. We got 498.6. That means nearly 500 points profit we got in Bank Nifty. We would have got this much profit today. My God, what a good trade we all missed. Especially Nifty and Bank Nifty lovers might have missed this great opportunity today. So generally, getting high liquidity zones in Nifty and Bank Nifty happens once in a while. You won't get it every day, right? Once in a while. That we missed it. Really, I'm feeling bad, guys. Okay, let us check. Bank Nifty 93,446. This is the approximate value. This is April, right? We have to check February. Sorry. ₹92,233. The February. So we have lot size 15 into 15. You all would have got 7,479 rupees profit. Let me note down also because I need to maintain these values in Excel sheet. So the profit is 7,479. So what is the ROI? Approximate ROI. This is approximate ROI into 100 divided by cost of one future slot 92,233. 8.1% ROI. The rounded value 8.1%. The 75 minutes demand zone has given an excellent trade for us, which we missed it today. 8.1 ROI means superb. If you would have taken two Bank Nifty futures, definitely you would have got around 15,000, close to 15,000 rupees profit. If you are an option trader, probably I'm not the right person to give you the calculations. Definitely you would have got even more profit. Because I am not aware of option strategies, so I cannot talk much on that. But still I can tell, you would have got even more profit. First of all, Nifty, Bank Nifty, if there are any opportunities near high liquidity zones, we should not miss it. And we can't plan again second trade in this zone because prices went very deep inside. close to the, when you can plan second trade if this is a high liquidity zone. If this 5-minute zone is a high liquidity zone, then only you will plan. Otherwise you cannot. Okay, this is about Bank Nifty from the 75 minutes. And any other high liquidity demand zones. So we have India Cement. C underscore DZ is having less priority compared to S underscore DZ from daily and below. 75 minutes means it is at least maybe one trade we can expect. Sometimes 2 or 3 also you will get, but well, let us see. India Cement. So let me go to 75 minutes time frame. Let me open India Cement. Previously we have drawn this zone. Is it the same zone? Let me check. No, it's not same because it is a fresh zone. This is 24.11, 9:15. 4 base candles. Twenty-four 11 9:15. So somewhere here. 24.11 9:15. 4 base candles. That's it. This is a 125 minutes demand zone. Rally base 24.11. Once again, let us cross check. 24.11 9:15. That is what I do. What I am doing exactly I am showing. I draw again, I will cross check. Because sometimes mistakes, we might draw in a wrong way, in a mistake way. Okay, what is the next step? So today again zone is tested. My God. Another trade in this zone. But first we will check. Let us don't be, what to say, overexcited. How is the 15 minutes? How is the 5 minutes? Then only we say it is a valid trade. If the structure is not good, even if it reaches the zone, it is not a valid trade. So we have to go to 15 minutes time frame. So let me change the time frame to 15. Sometimes prices may not reach our fine-tuned area. That is also possible. See here, pro gap is there in this stock. We have 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6 candles are there. We have a leg candle and 6 candles, base candles. Maybe this is also a medium size candle, but we are making it part of the base because we have base candles earlier. But really 5-minute structure is good or not, we need to check, because these base candles in between the leg candles in between these base candles will disturb the structure sometimes. So that is the reason why we should always check the quality of the zone. So this is a 15 minutes demand zone. So inside this 15 minutes demand zone, we should identify, see, in this zone we have 6 candles. We have a leg candle, 1, 2, 3, 4, 5, 6 base candles. This medium size leg candle is also part of the base. And here we have a leg out candle with pro gap and hidden body we are adding to this. Already once prices there was a rejection from this zone. It has to show a rejection. Is it there in the report? Which stock we are referring? India Cement. It's not considered the rejection. Is it missed narrowly? No, prices entered into the zone. There is a rejection from this zone. Software missed it. I need to look into this. Okay, anyway, there was a rejection from this zone. Even from 15-minute zone is also. And now let me look into 5-minute zone. Even 15-minute zone also prices entered today. Yes, perfect. It gave an entry. But a 5-minute zone should be there inside. A valid 5 minutes. Otherwise, we would not have taken a trade. Is there any valid 5-minute zone in this? Yes, there is a valid 5-minute zone. So we missed the trade today. We missed. Why? Prices didn't reach up to this area. There is a pro gap area. Because of this pro gap, from here, if you would have considered this entire pro gap up to this, because previously pro gap is filled up to this area. If you would have drawn a zone like this, 15-minute zone, if you would have drawn a zone like this, if this risk is within your limit area, what is the risk? The low of this candle, how much? 221. Let me calculate the risk. Really, we would have accepted this trade or not based on the risk. 221 minus the low of this candle, 220. So we got 1. We got 1 rupee. So mostly this is a 0.5% risk. But let us see, based on ROI, we will see the risk. So 1 into 2,900 means 2,900 only. So your loss could be 2,900, your estimated loss. In case if the trade is against you, the estimated loss is going to be 2,900. But is it acceptable with compared to your investment? What is your investment? Lot of the futures cost. That is margin cost. It's not the cost of the entire lot. It is the margin cost of the lot. That is 2,94,000. That means close to 1% you are getting. 2,900 into 100 divided by 2,94,019. This is your loss. 0.98% could be your loss on the investment. If analysis goes against you, definitely we can bear the risk up to 2%. But this is only 1%, less than a little less than 1%. Or you can say close to 1%. So 1% risk easily we will bear from our capital. So 2,900 rupees loss you are ready to bear. Okay, but what about the reward? That is also we need to check. That is more important. So further, let us look into the target. This could have been our trade plan, including the pro gap, because pro gap is filled previously up to here. Now remaining area plus still your zone, this is your trade area. Can we take within this pro gap? Yes, you can provide if the risk permits. Is the risk permits? Yes, risk permits. But what about RR? That is also important. So you have to do these calculations. First, let us go to 15 minutes because we are expecting 15 minutes target. So you have a rally based drop. Let me use magnet to draw exactly. Okay. This is the rally base drop. And then we got the entry in this candle. The moment it gets, see the push. After that, their kind of consolidation, and finally, end of the day, you got this much profit. So you got good RR here. Let me check long position. This is your risk with some buffer also added approximately, and this is going to be your RR. So you got, what is the RR risk reward? You got 1:7 RR is there. 1:7 RR. Excellent. How much profit you would have got in this trade? Open of this candle, sorry, close of this candle, 228.40. Minus. And what is your entry? 221. You got 7.4 rupees profit. 7.5 rupees profit. You 7.7 rupee 40 paisa. You got the profit. Oops, unnecessarily. Already we have this, right? Okay. 7.4 into 2,900. You got 21,000 rupees, 460, 21,460 rupees profit in India Cement. Let me note down. India Cement, 21,460 rupees profit. This is the approximate values I'm calculating. See, every time I calculate approximate, because I don't have time again correlate with this chart with the futures chart, because the difference is only minute difference. So that's why all these values are approximate values. Because previously I shown you in last Q&A session how to calculate equity chart with the futures chart. Please refer that video. If you're still having questions, how we can trade, how we can analyze the equity chart but trade in futures chart. If we have that question, last Q&A session, I detailed examples I explained. You see the difference is a very minor difference and a negligible difference. But perfect trades, how you can take, I explained clearly. Please look into that. You cannot take equity price while trading with the futures. At that point of time, whatever the futures price is there, that price you have to take. But your analysis is as per equity chart. So this is a 21,460 is profit. So ROI into 100 divided by 2,93,413. This is a 7.3%. Still, Nifty Bank has given more return. That is 8.1 ROI. Their investment is also less. But only thing is here investment is more, profit is also more. Your profit is 21,460. That point we should not forget. But ROI point of view, Nifty has given at least 0.8% more ROI it has given. So this is about India Mart. Now let us look into the next chart. Any other high liquidity zone? Yes, Indigo is there. A lot of high liquidity zones yesterday, but we missed them. Indigo already tested 3 times. Let me open Indigo. Let me go to 75 minutes time frame. How to remove drawings. Okay, what is the exact candle, legging candle? We have 19 to 240. 19th February, 19th February at 9:15. 2024, 19th February at 9:15. Four candles are there. So 19th February. So 19th February, 9:15, we have 1, 2, 3, 4 base candles. So let us draw the zone. So this is a 75 minutes demand zone. Let me cross check. 19th February, 9:15, 4 candles. Yes. So now what we have to do? Go to 15 minutes time frame and find you in the zone. Already deleted. Why it came again? Okay, here we have rally candle, two base candles, rally candle, and we have drop candle, base candle, rally candle. We have two zones, two 15-minute zones here. This is one 15-minute zone. This is a 15 minutes zone, and this is another 15-minute zone. Let me draw type 2 only, because so that it will fit exactly inside the zone, the base. The base should be, if it is inside the zone, our analysis will be much accurate. And moreover, look into this. This 15-minute zone is a high liquidity zone. First test, second test, third test. Several times it is tested. This is again fourth, fifth. Several tests it has given. So definitely we can give priority. You can plan a trade in 15 minutes if the risk is within your limit. But before that, ensure the structure is good inside this. So let us go to the 5 minutes. See here we have a drop, two base candles, and a rally candle, follow through candle. That way we can draw. You can draw like this. To further minimize the risk, you have a 5 minutes demand zone. And here we have a rally, base, rally. You can draw a zone like this. Rally, base. So here 15 minutes and 5 minutes are exactly same. Because see the wick of the base candle. Wick of this leg out candle, not base. Wick of the leg out, entire occupied. So that means our 15 minutes and 5 minutes are exactly same here. If at all, if you want to minimize the risk, go for type 3 entry, something like that. At 15 minutes level, drop 3 base candles. Here you can drop. So this is a high liquidity zone. 5 minutes tested, 5 minutes tested again. And again these zones are getting tested again. But do we get any trade today? When is this candle? Today it gave an entry, first entry. It gave again another entry. The high liquidity area, multiple entries it has given. 2 entries it has given you today. Morning at 9:15 candle, 5 minutes candle, and another entry is, if you missed that, maybe at 10 o'clock again candle it gave. 10 o'clock 5 minutes and 10 o'clock 10 minutes continuously. But what is our target? 15 minutes is the target. So where is the 15 minutes target? Here we have rally, base, drop. This is the one, rally, base, drop. Supply zone. Excellent trade. How many trades we got today? I'm feeling very bad, guys. Lot of money, trading opportunities today. We all missed it just because of one day. I'm not available. Okay, but anyway, let us calculate how much profit we missed. But anyway, high liquidity zones point of view, whether you trade or I trade, it doesn't bother. Whether am I working or not, that is what that is telling. That's why we have to track the data. So what is the profit? Low of the candle 3160.70. Low of this candle is 3160.70. This is the target minus the entry is this 5 minutes area. So approximately what is the value? Okay, let me go to 5 minutes and take the perfect value, not the approximate, because we are maintaining an Excel sheet. So let us calculate the exact values. The open of this candle is 3083.65. 3083.65. Let me cross check. 3083.65. Yes. So 77 rupees profit it has given. Indigo. $300 is the quantity. What is the margin cost? 2,58,000. So 77.05 into 300. 23,000 rupees profit, Indigo. Let me note down. 23,115. What is the ROI? Into 100 divided by 2,58,067. So 8.95. So the approximate value is 9% ROI. The rounded value. 8.9 means 9%. This is our 75 minutes demand zone trade. High liquidity zone. So another perfect trade. But this is a high liquidity zone. This 5 minutes is a high liquidity zone. Supported several tests. But each time slowly prices are going a little deep inside. That is the point you have to observe. See here, today prices went a little deep. And the next zone, let us look into the another 75 minutes zone. Indigo is finished. The next high liquidity zone, we have L&T Financial Holdings. This is a high liquidity zone. This is 24/1/2024 at 1 o'clock. Two base candles. So this is the zone, and it has previously, let me remove we have supply zones, trades, high liquidity. Okay, what is the zone here? Let me check once again. 24/1, 1 o'clock. Very good. This is 24 January, 11:45. Then where is 24 January, 1 o'clock? So this is 24 January 1 o'clock, and these two candles, this is a medium size small candle, probably is less than medium size candle according to the software. That's why it considered this as a base candle. 125 minutes demand zone. See, generally how we draw this zone, this is a leg candle, one base candle rally. But see, the software did not accept this as a leg candle, even though it is having more than 50% body, maybe more than 70% body might be there. The reason why it did not consider is, it is when it is comparing with all the earlier candles, it is considered this as a small candle. Small candle, even if you have more than 75% body, that will be considered as a base candle. But we mostly consider this as a leg candle, base rally. Who is correct? I cannot debate on that. System always does in a perfect way according to its algorithm, no doubt in that. But human way point of view also. But finally, who wins? Where the real order flow is there. Is it above or below? If it is below, we might have missed an opportunity manually if we do. But this system will work. And if above is there, both we win as well as system will win. But anyway, let us identify a 15-minute zone inside this. Is there any valid 15-minute zone? That is what we need to check. Yes, here we have a rally candle, 4 base candles and a leg out candle. This is the way we can draw a zone. And another way is we have a rally candle, 2 base candles and a rally candle. This is the another way you will draw. These are all the 15-minute zones. We have 75. Inside 75, we have 2 15-minute zones. And inside these 15 minutes, we need to draw 5-minute zones. So let me go to the 5 minutes time frame. Here we have a drop, 3 base candles and a rally candle. Add some hidden body here, but this is more perfect, but okay. You may consider this as a base candle, but I am convinced sometimes we compromise and we draw. You can consider this as a demand zone. This is a valid demand zone. But those who are not convinced, maybe you need to consider this entire area as a demand zone. That means 15 minutes entire area. Because the leg out I compromised and follow through candle is there. That's why I compromised. And what about here? This is a leg candle, these 2 base candles. This is the way you can draw your 5-minute zone inside this. See, this is not a great leg out, but there is a follow through candle is there. And today what happened? This 5-minute zone is violated. 15-minute zone. Structure is good, no issue. No, actually I'm trying to find the reasons. Are there any reasons for the violation, zone violation? Because they are very important for us. If we didn't find a reason, that's good. If we find a reason, that should be a learning for us. Is this candle a valid leg-in? I'm checking. Okay, it's valid, nothing wrong. We are considering this as a leg-in for based on the range, ERC. This to base candles, the only thing we compromised here is leg out. The leg out may be not good for this violation, maybe that could be, because this candle body and the wicks, when you compare, at least it has 50%. Actually, we should have a strict 75% body, but when we compromise, at least I look for 50% body. When we compromise, below 50% body, definitely this is a base candle, a medium size, if it is a medium size candle. But this candle is not medium size, a little bigger than medium size candle compared to the other candles. That's why the structure is not really convincing. Maybe that could be the reason. But anyway, we have to accept the loss here. Why I'm actually interesting is after that it moved up very well. Who could be the reason? I'm trying to find that. Maybe institutions created a new zone here. Rally base, rally they created, and maybe it is very strong. That's why see here. After that it picked up the orders again and then again pushed up. Okay. So in L&T Financial Holdings, we got the loss. So how much loss we got? So what is the close of this candle? That is our entry. 163.5. 163.5 minus the low of this candle. 163.05. 163.05. We got 45 paisa loss from this trade. So how much loss we got? 0.45 into 4462. You got 2007 rupees, or you can say 2008 rupees, close to 2008 rupees loss we got in this trade. And what is the negative ROI? Into 100 divided by, but before that let me note down this. L&T FH, we got a loss 2007.90 paisa. So what is that, something wrong? Into 100 divided by 2007.90. This is the loss we got into 100 divided by 2,37,597. So 0.85%, the round value 0.85. That means 0.9%, because we are rounding to one digit. So 0.9% loss we got. This is 75 minutes demand zone. And the next high liquidity zone, the last one in this list, UBL. And UBL, when we generated this on 29th November 23 at 10:50, 29:11, 10:30 candle is lagging. After that, we have two base candles. So let us open UBL. We have to look for 75 minutes. I think previously once we have drawn this. So when is the leg-in here? UBL 29:11, 10:30. 29:11. So this is the 29:11, 10:30. Two base candles, and 14:15 is the leg out. This is 14:15. This is the one. But above, we have a daily high liquidity zone. There is a daily high liquidity zone above this. Previously, we have drawn this. Let me go to the daily time frame. We have a rally, we have a base, and we have a rally. And below the high liquidity zone, there is a 75-minute zone. When 75-minute zone will be executed only if daily high liquidity zone is violated. And moreover, this UBL, daily high liquidity zone, we have drawn this zone few days back. We didn't draw this zone now, right? It was there few days back, because previously once prices entered into the, prices came near to this zone. Previously once prices came near to this zone. 21st December it came near to the zone. Probably on that day list it might have given. After that recently, on 27th Tuesday's list also it might be there. It was near to the zone. But earlier we have drawn this zone, the daily zone. At the time it is a fresh zone. How we fine-tuned the daily zone? Let me show you how we fine-tuned. Inside we identified this is a leg candle, two base candles, and a rally candle. This is a 75-minute zone inside daily. But the one we identified is below this, rally, base, rally. First of all, high liquidity zone daily is having highest priority. Unless that is violated, we cannot get an entry in 75 minutes. Is the zone is good? Yes, because we already drawn a zone inside this. A 15-minute zone and 5 minutes. Let us check the 15 minutes and 5 minutes. And you guys know about this daily zone earlier, because in one of our earlier discussions, I have shown you this list, how we fine-tuned. So here we have a leg candle, three base candles, and a rally candle. This is the 15 minutes area. Inside the 15 minutes area, we have 5 minutes area. See, this is the 15-minute zone. Let me show you. Let me change the color, light color. Let me change all the colors to light colors first. I'm changing to weekly color. Inside 75 minutes zone, I'm changing to daily color, so that all you can clearly see. See here, this is the daily zone. Inside the daily, you have 75. Inside the 75, we have 15-minute zone, leg candle, 3 base candles, and a rally candle. And inside we have drawn 5-minute zone. This 5-minute zone already drawn earlier itself. The 15-minute zone I ignored because both colors are mixing and creating disturbance. I deleted the 15-minute zone. But this is the 15 minutes. I have given light color compared to the 5-minute zone. Now get into the 5-minute zone. Here you have 5 minutes demand zone. I think 2 days back video, if you look into this UBL, you will be seeing this high liquidity zone. But that day we didn't get a trade. See here, we have a zone. We have a leg candle, 3 base candles, and a rally candle, and follow through candle. This is a 5 minutes level I considered. So this is the zone we have drawn. And today prices entered into this zone, right? Is it today only? Let us check the candle. Or previously. No, this is on yesterday. Yesterday 1525 prices entered. In today I explained this. Today HLQ trade, I explained this. Yesterday it came, we didn't take because last minute it entered. In today morning HLQ trade analysis, I actually explained this UBL. I'm sorry, I forgot it. So we got entry yesterday during last minute. If anybody carried the position today, you would have got profit. And our 75 minutes is below this. So obviously, unless this zone is violated, we won't get a trade in 75 minutes. That's why I'm just leaving 75 minutes as it is. See, today's price action. Today we didn't get an entry here. Just before reaching itself, prices were started moving. If anybody had yesterday took an entry here and carried the positions, today they would have got a very good profit. That is what I discussed today morning HLQ analysis video. So we missed this, we didn't get a trade in this below 75 minutes. You may ask a question, can't we fine tune that 75 minutes? Yes, we have to fine tune to check the quality of this zone. This is the 75-minute zone. Inside 75, you need to fine tune to 15 minutes. And this color. So this is a 75-minute zone. Inside 75, we have a 15-minute zone. This is the 15 minutes. Actually, 75-minute zone, the daily zone picked up the orders from this 15 minutes area. And 15 minutes is holding the prices several times. Probably there could be a 5 minutes high liquidity zone here. Let us check. This is the 15-minute zone. Let me change the color. Now 5-minute zone. Let us look into the 75 minutes zone. This 75-minute zone is below daily zone. That point you should not forget. Because today's session I am showing you how generally I draw the zones. See here we have ERC candle, base candles 1, 2, 3, 4. Maybe you can consider this as a leg out, but I am not really comfortable with the structure here. This price action I am not comfortable. And in the recent price action we have rally base rally. You can consider this as a ERC candle having sufficient body. You can consider this as a leg-in. If that is the case, you can draw a zone like this. This is a daily demand zone. This is 5 minutes demand zone, DZ. But it is already tested. You can't plan a trade in this zone. It is already tested. Didn't have any fresh 5-minute zones here. That means this 75-minute zone will be violated because 5 minutes structures are not really comfortable here. See the price action here in this area, not comfortable. All these candles. Even if you draw any zone, this is a leg candle. See, your base candles are not clear. If you want to combine all this, see it is a too much range is there. Can't treat this as a base candle. That's why this area I didn't feel any comfort to draw a zone here. The only thing you can draw base rally, but this is violated here. Not exactly violated here, some small is there, but next candle it is violated. While violating, it created a zone. After that, rally, base, rally, but this rally candle again, when you are comparing with these candles, see here. So generally, if it is software, what it does, it compares these candles with all these big candles. Then it will consider this also a base candle, not a leg candle. We are hiding these candles and we are checking the base. That's why I'm not really comfortable with this zone. I'm believing that this will be violated. Maybe there is another possibility, rally, base rally, maybe sufficient length is there. You can draw like this. They are also tested again. Up to this digital line, it was, because it picked up the orders from here. Or maybe you can consider this is the one, drop base rally, probably. Drop base rally, but again it is tested here from this zone, picked up the orders. It's already picked up the orders, but multiple times it is picking up the orders. Maybe this could be acting as a bear trap, who knows? Maybe this zone can act as a bear trap. To minimize the risk, you can draw wick to wick. But if you draw up to, wick to body, if you draw wick to wick, you see the order flow is picking up from here. Previously, even here, this entire zone. So probably below this may act as a bear trap. That possibility is there. We have several possibilities, but this zone alone is having, I have some questions about this zone. Okay, anyway, we didn't get a trade. Once it is violated, we will look into that. Once the daily zone is violated. So this is about the 75 minutes demand zone, and the last one, 75 minutes supply zone. Let us, for entry time frame is 75 minutes. Let us find the stocks near 75 minutes supply zone. Now 7 stocks are filtered. Let us look for high liquidity supply zones. No high liquidity supply zones. That means today only long trades. See, our high liquidity concept supported today long trades only. All long trades only executed today. And ultimately, because of all these long trades, that is a kind of signal. Nifty also finally, what happened? Moved up. At some point of time, Nifty was in red. Probably that was the time we got the entries in all these zones. After that, Nifty got the recovery and then it moved up. So this is the end of the report, and also analysis also completed. I don't think you require any high liquidity zone analysis because we already completed the high liquidity zone analysis. Even though we didn't UBL, we need to add to the daily. One stock we missed to add, that is LNT. We didn't add to the watch list. One more we missed. Indigo also we did not add to the watch list. What about India Cement? And Indigo. Why I'm adding into the watch list? Let me show you why. Actually, what I do, because I want to teach you people also that. See, these are all the high liquidity zones. Yesterday we have 1, 2, 3, 4, 5, 6, 7, 8, and Bank Nifty 9. We got 9 high liquidity zones identified yesterday. Generally, what I do, I go to the daily time frame. I just observe what's really happened. Daily point of view. Some may not be daily. Some are 75-minute zones. So Bank Nifty is the one we got. I just check. And this is not a demand zone. This is a supply zone target, right? We didn't change the color. See, this is a Nifty Bank. This is how we got the profit. See, perfect way. See, wherever we drawn, from there only orders are picked up. They are not going anywhere and picking the order. See, we have drawn the zone, we went to the market and we saw this is what happened. Bajaj Finance. This is what happened to Bajaj Finance. It went inside and picked up the orders. But, initially Bajaj Finance was not there when we analyzed. We thought this will be violated. So finally prices went inside. When it went inside? During the last hour of the market. At 2 o'clock 30 minutes candle, prices went and came up. Last 1 hour. Why prices? Who is the reason behind moving the prices up? That is what generally I look for. See, we know that this zone will be violated. We didn't plan a trade in this. If you look into the 75 minutes, this is the 75-minute zone we have drawn. But why this zone will be violated? Why we thought it will be violated? First of all, when this zone is created? In May 23. 15-minute structure is not good. 5-minute structure is also not good. Sometimes we should know the reasons. What could be the reason? Because we are expected this zone will be violated. But that didn't happen. So what could be the reason? That is what we have to learn. When you want to learn something, sometimes you see the reasons like this. Inside 75 minutes, you did not find a zone, but for this entire 75 minutes order flow is Rally, base, rally. Draw this 5-minute zone. So this is the one actually picked up all the orders. This acted as a high liquidity. This 5 minutes area is acted as a high liquidity. Earlier several times even the entire zone is formed from here. This is the area, from this area the entire orders, high liquidity area. See, prices came, went up, prices came, went up. Again prices came down, went up. Is today prices entered into this area? Is this the reason for the push? We don't know. Let us go and verify whether prices really get into that area or not. See, we are trying to find the reasons the zone should be violated, but who stopped it? This is the one. This is the one. But what we missed in our analysis? Finding this high liquidity area. Sometimes this is the what happens when we are doing analysis. We don't look out of box thinking generally, we miss it. Within the box means see, the inside 75 minutes, only we looked. Inside 75 minutes, inside 15 minutes only we looked into that. But out of the box thinking, what is out of the box thinking? If you look beyond that 75 minutes zone, we identified a 15 minutes high liquidity zone which is formed outside. This is the one came from outside. Is this the one? Yes. This rally base rally is the actual reason behind for this entire movement in today during the last 1 hour. This is the 75-minute zone we drawn. We looked only inside the 75 minutes. But actually this entire 75 minutes order flow started from this high liquidity area. This is holding the prices. So this could be the reason behind why this zone is not violated. We thought 75 minute zone should be violated, but the 5 minutes high liquidity is holded the prices. And see how fast the prices moved. Because this is a high liquidity area, institutions again added a new order flow into this. Probably a new zone might have been created within this area previously when last time prices entered into this zone. Let me check even that. No, last time this is only. Maybe this could have been a drop candle, 1, 2, 3, 4, 5. This is also a base candle. That could be another reason also. Generally what happens within high liquidity area, new high liquidities will be created. 1, 2, 3, 4, 5. Because this is a medium size leg candle. This medium size leg candle also will be considered as part of the base if there are base candles earlier. So drop 1, 2, 3, 4, 5 base candles and again a rally candle. And this 5 minutes zone is within high liquidity zone. This 5 minutes high liquidity zone. Because a zone is having high liquidity zone, several times I told you, high liquidity zone is an area where multiple zones will again and again will be created. Generally in lower time frames zones will be created, but because we limited to 5 minutes, so within 5 minutes is created. But if you look into 1 minute, you may find some 1 minute zones here, but we don't have data because TradingView will provide only last 3 months data only to inspect the 1 minute data. Anyway, this could be one reason why there is a strong movement of Bajaj Finance during last 1 hour trading. And also this is the reason why we thought this zone will be violated. Maybe this is the reason why the zone is not violated. Now, did you understand why I am adding all the stocks into the watch list, and what again I am doing? Going to the daily time frame, and again I watch all the stocks one by one. At the time I get clarity. At the time again once again I go back and I will try to check my analysis. Sometimes I can make mistakes, right? But anyway, according to us, this zone should be violated. But it didn't happen because of this 5 minutes high liquidity is holding the prices. That is what we identified. Okay, fine. Maybe if it is, maybe if you would have identified 5 minute zone, 5 minute zone is inside daily high liquidity zone. Directly you would have taken a trade here during last 5 minutes. Next one is India Mart. India Mart is also one area we thought this zone will be violated. But today it didn't happen because of the 1 minute zone, 1 minute aggressive trade. But see what happened after that. Again the zone is pierced. Why the zone is pierced? See here 1 minute trade, second time prices came because see here the order flow is already took because prices went more deep inside. So next time again came, couldn't push much, and then came down and just pierced. But after it pierced, why there is a big push from here? Because we expected this zone should be violated. Why this zone is not violated? What could be the reason? Have you seen this week? Somewhere in this week, there could be some more 1 minute zones will be there. Generally, VIX indicates there are zones in the lower time frame. Please remember, VIX indicates there are zones in the lower time frame. Most probably there is one more 1 minute zone might be there below this. Let us check whether what I told is really working or not. Let us check. If there is a zone, 1 minute zone below that, at least we can say some justification is there. No, there are no zones below this. But here, yes, there is a zone. We have a ERC candle, the drop ERC candle. We have a base candle. Then at the hidden body, we get a leg out candle. If you add the hidden body, then you draw the zone week to week, 1 minute zone week to week. See, this zone is again holding the prices. That means this is acting as a one minute high liquidity area. It is holding the prices. Is prices entered into this zone today? Let us check. Yes. See here. So it picked up the orders from the below. The zone below is acting as a 1 minute high liquidity zone because it is supporting multiple tests. It's not letting the prices. See here, continuously 3 candles it holded, 1 minute candles. Now let's go to the 5 minutes and observe this. See, both the candles, 5 minutes candles, pick the orders from this zone, and this zone is the reason behind the entire push. Why we missed it? Because we didn't really care about 1 minute zone analysis. Today we have seen why this zone worked out. Because we have seen a price action clue, order flow is there. The one below we didn't care, this is the one we didn't care. We didn't even analyze because mostly we stop our analysis at 5 minutes level. But it is important to do analysis at 1 minute level only once you get experience. See, most of the times what happens, every time if you do analysis 1 minute, we take some wrong decisions, wrong analysis we do. Instead of successful, we see the failure reasons. This is only we are doing post-mortem analysis. Why there is a move from here? The reason is 1 minute. There could be a 1 minute zone. And moreover, now we identified that 1 minute is acting as a high liquidity zone. But those experienced people who would have having very good experience identified that 1 minute is a high liquidity zone, definitely they would have taken a trade here. During last 1 hour of the trade, it has given a very big push. So much profit it has given. See, this is the 15 minutes target. It is even violated the 15 minutes target and went beyond this. Probably the next 15 minutes level target it reached. This is the next 15 minutes level target. Maybe if you draw wick to wick, here wick to wick, this is the supply zone. This much target it has given. Anyway, we are not calculating them because we are limiting our analysis to 5 minutes only. But we are trying to find the reasons. This is going to be the learning for us. Who could be the reasons? Actually, the zone should be violated. It didn't happen. Because 1 minute's area, strong order flow is there, which is holding the prices. Generally, what should happen? The zone should be, institutions create a new zone and push the prices up. But that also didn't happen here. The only last option is 1 minute area. So that is what we have seen here. Why? And again, I will check all these things. This is the reason. I get clarity. Which zones are pierced. At the end of the market, see, during the trading, we will plan the trades as per our trade plan. End of the market, what happens to those zones? I go to daily time frame. From daily zones, I will check. So here the zone is pierced. And then below we identified a 1 minute high liquidity zone. Probably that could be the reason why this zone is not violated and holding the prices. This is what our learning, actual learning. That way you get experience. Once you observe more and more and more on 1 minute actions, then some kind of knowledge you will build, experience. Once you get the experience, you will also do your analysis based on these points. Next time any good opportunities are there, you don't miss even at 1 minute also. But it is too early for you people to analyze the 1 minutes until you get experience. You should not forget that point. Next, what happened to our page industries? See, page industry, we got a very good profit as per with the help of NeoStock supply demand zone chain. Because TradingView is not providing one year data, we took the help of NeoStock's supply demand zone chain, identified this 5 minute zone. That means the 15 minute zone is perfect, 5 minute zone is good. Next time when your prices enter, definitely you will plan a trade here. That way it reached the target. So it's a valid trade. Because TradingView is not having data, we cannot blame our high liquidity zones. High liquidity zones are doing their work because the structure is good. If TradingView is not providing the data, it is a problem with the TradingView, not our high liquidity zones. Because every time we need to check if a high liquidity zone is working, why it is working. If it is failed, why it is failed. We have to verify that. Today we identified one zone is failed. We try to identify the reasons. We didn't find a reason. So it is a genuine reason for the zone is violated. You need to register that in our Excel sheet, the failure. See, this is again India Cement, a successful trade. But again here I have to draw supply zone. My colors are not. Okay. Next one is Indigo. This is again another successful trade. Next one is REC Limited. Prices didn't enter into the zone, we didn't get a trade. Next one is L&T Financial Holdings. This zone is violated, but it picked up the orders below. Definitely there is some 1 minute zones will be there. Who knows? But we can't analyze the data because data is not available. This is Jan 24, February. Oh, data will be available then. 1 minute data will be available. See here, from here, zone is violated, picked up the orders. So who is the reason? Let me draw a horizontal line. Let us get into the old data and check. This is a 1 minute zone. Maybe this is the reason. We have a rally, 2 base candles and a rally. But anyway, we can't monitor this much level, but just trying to find the reasons. What could be the reason behind this? Generally, institutions should create a new zones and push the prices up. If that is not happening, who could be the reason? That reasons we are trying to find. This failure you have to accept. We accepted that. But there could be a reason. And another thing is, within that zone, this 1 minute zone, not only picked up the orders, within that zone, drop base, this is also 2 base candles and a rally candle institutions created. Drop, 2 base candles and rally. That means below the zone, institutions are creating new zones again and again. Maybe that could be a high liquidity zone, the 1 minute zone. This is too early to indicate, but I'm telling there could be a possibility. Because that is the area only institutions again and again they create new zones. Maybe this kind of understanding will helpful to us next time when prices are again entering into this area. These learnings. Because why every time again I do go to time frame, look into everything is learnings will be there. Future trades, we get an idea. Future trades, we understand the order flows where we have strong order flows. See, ultimately the goal is if you want to get a good profit, order flow should be very strong. Then only it is possible. So that way we identified there is a 1 minute zone is there. That was the reason behind this. Not only that, within that new 1 minute zone is created. Inside 1 minute, another 1 minute, LOTL. If LOTLs are keep on creating, that might be an indication there is a high liquidity. And next one is UBL. This was the picked up from. Initially we thought this is picked up from today's. But if you see daily candle, you will understand. Actually, orders are picked up yesterday. Today prices did not enter into this zone. So this is one kind of cross-checking I do every day. That is one reason behind adding all the stocks into watch list. The main advantage is watch list immediately during the trading date. Quickly you can refer the stocks. But at the end of the day, the watch list will be helping me to cross-check all these stocks. If I would not have cross-checked, I would not have identified Bajaj Finance actually entered into the zone. And there is a huge rejection there. We thought Bajaj Finance will fail. It will be violated, but it didn't happen. Finally, we identified there is a 5 minutes high liquidity zone is there coming outside the fine-tuned 75 minutes area. Okay, this is hope how I analyze the stocks and how I will be observing. And moreover, somebody asked, want in live trading, somebody asked me to show. That is what today I have shown you. Hope this information will, but this is a long, lengthy video. But those people who are having interest to watch what's really happened on the live trading day, how we did on the live trading day, this would have been a great opportunity for you. Okay, this is the high, there won't be any HLQ zone session today because I have completed everything here. So let's all meet again in our next videos related to stocks near demand and supply zones and bullish and bearish trade setup videos. So I'm taking a break here. Let us all meet again. Thank you.